Wealthy Rising, Wealthy Rising. Welcome to Class 1. All right, this is the update of Class 1. If you are new to me, new to my channel, new to the ecosystem, I appreciate you for coming to check us out. Hope you get some value. If you're already in class, I also want to say thank you. I appreciate the support and participation. Okay, so in order to get into class 1, you have to pay a $75 one-time tuition. That goes for every single person that becomes official in the classroom. There's a $75 one-time tuition to get access to this classroom. Once you have access, it's up to you to actually go over the information and apply the information. It's already been proven that you can make money every single second using the information in this classroom. Okay, we're going to get into it. Right now, I'm going to start you off with classwork. Everyone needs to go to the classwork, and the classwork is going to basically explain to you the pieces of DeFi. So, if you do not have a Coinbase account, we're going to start there. Okay, if you do not have a Coinbase account will give you access to buy and sell crypto with your bank account, with your debit card. All right, this is the first step that most people should go through. They should have Coinbase or they should use crypto.com. Okay, so I'll just show you crypto.com too. These are exchanges, these are centralized exchanges. Okay, that means that they are regulated by the government, they have been approved by the government. So if you get into any trouble, if they go out of business or things like that, there's supposed to be some insurance because they are backed and regulated by the government. This is what a central exchange is. So you got Coinbase, you have crypto.com, you have Kraken. I believe it's what Kraken.com, I think. And I'm just giving you some examples. So that's 3 different exchanges that you can use, and there's plenty more out there. Okay, this is where you're going to buy your cryptocurrency to get in the game. You need to have access to a central exchange. Okay, you need to download a wallet, a Web3 wallet, a cryptocurrency wallet. So right now for the class, we want people to use the Para wallet. Okay, the Para Algo wallet. If you look it up on your App Store, your Google Play, it's going to say Para Algo wallet. This is what the logo looks like. All right, so this is where you're going to actually send your cryptocurrency from Coinbase. You're going to send the cryptocurrency from Coinbase to your Para wallet. Once you have the cryptocurrency in your Para wallet, then you will manage it from there. You will have complete custody and complete control of your assets inside of your Para wallet. Right? Another wallet that you could use would be the DeFi wallet, also an Algorand wallet, and it has different features on it. But once again, in order to get into cryptocurrency, you must have a Web3 wallet, a cryptocurrency wallet. It doesn't even matter if it's Trust Wallet, which will also be using Trust Wallet for other things. So let me show you that. Make sure that you have Trust Wallet. Okay. You can download Trust Wallet from the App Store or the Play Store as well. That is 3 different wallets that I've just shown you, 3 different exchanges that I've just shown you. So that's how you can buy in crypto, cash out in crypto. And this wallets are where you can hold your crypto and do other things to manage your assets. Deposit assets to the wallet. All right, so that's basically sending money from your Coinbase, the exchange, to your Web3 wallet. Once you have downloaded the wallet, you're going to connect your wallet to a platform. So that's another reason to have a Web3 wallet, because Web3 wallets connect to other platforms, connect to other websites. And in our case, we are going to be going over private banking for this video to start people off with class 1. So for this video, this is how you set up your private bank account. I'm going to go over the straight basics of just getting this set up, what it is, and getting it set up. But before that, you make sure that you have your exchange set up and you make sure that you have your wallet set up. Then you're going to come to Folks Finance. Folks.finance is the platform, is the website. And then we're going to launch the app. All right. Once you get here, you're going to see this screen. You're going to connect your wallet. And you can also do the exact same thing in your phone. If you don't have a laptop, you can do all of this inside of your phone. We have videos on the mobile version as well. But I'm remixing the setup right now. So make sure you have Parawallet or DFly. You're going to click it, and then you're going to scan the QR code with your wallet. The wallet has a QR code scanner inside of it, and you're going to use that to scan and connect your wallet. So I've sent $46 to this wallet. This is the Dow wallet. As you can see, the segment name is there. Segment name is there. You can connect multiple wallets as well. Okay, so the deposit account, the deposit area. The deposit area is the safest place for you to put your money on Folks Finance. All you're going to be doing is depositing the money, depositing the assets. Okay, so a quick example of that will be, make sure that you click this so you don't get confused about what's in your wallet, what's available. Right here at the bottom, you see we have 238 algo available, and we're going to deposit 8 algo. Type in 8, click deposit. Confirmation will pop up inside of your Parawallet, so you make sure that you have your Parawallet open when you're doing transactions. Confirm the transaction. And transactions on Algorand take 3 seconds roughly. So you have successfully deposited the 8 algo. Now we have 8 algo that we've deposited. It's 7.999 because of the fee that was charged, very small fee. That 8 algo is worth $1.54. And this algo is also going to compound 24/7 at the 2.42 APY. For those who don't know what APY is, it's annual percentage yield. It's a difference between annual percentage rate or return. That's where they give you your money back. At the traditional banks like Chase, BOA, or credit unions like Navy Federal, they hold your funds and leverage them and don't give you any money to split. So you can see that this just went up to $1.55 because the price of algo is fluctuating, is going up, and then your assets will be compounding. So 2 things are happening in the deposit account. One, you're accumulating more assets from the compound interest. 24/7, you're accumulating more assets. The second thing that is happening is your value of your assets are going up and down in price. So you want to make sure that you understand that you're always accumulating more assets as long as you're a deposit, and your value, the price of these assets are appreciating and depreciating in real time. So this is how the deposit area works. Right now, you cannot put $1.55 in your bank account and earn 2%. You don't even earn 1%. So that's the first step to setting up your private bank, understanding that this is where you're going to be depositing the money. This is where you're going to be stacking your check, right? This is where you're going to be holding your funds so that they can start growing and compounding for you. The next thing that you need to practice, review, is the loan area. So this allows us to create our own loans. Like I told everybody, you're going to set yourself up for the bull run. So type in bull run, make sure it's on general, create loan, confirm the transaction. Okay, bam. So you have 1 loan. If you are in class and you still have 2 loans set up, you need to convert your account to having only 1 loan and prepare for the bull run. Next, we're going to click on manage. Right now, this loan is completely zeroed out, empty everywhere. So we're going to add 100 algo to our loan. And right now, 100 algo is worth $19.38. Okay, successful. So now our loan, once again, the fee, 99.9, that's a small fee. And now there's the compound interest. So now we have 100 algo compounding at the 2.42%. Okay, and you're going to see it hit again. There it is, compound interest, but you're not earning money. You're not earning cash. You're earning more of an asset. You're earning a piece of an asset 24/7. And assets can be converted back into cash. All right. But you're going to leverage your assets. The collateral side is how you make money off of the asset when the price goes up. So this will continue to compound on its own all day, 24/7. And remember, you'll earn more of the asset, and the price of the assets will appreciate and depreciate. So they will fluctuate. You need to know that. The liquidation margin. The liquidation margin is the most important part of the loan strategy. The liquidation margin helps you to manage your DCA, your dollar cost averaging. It allows you to manage your hedging. If you want to bet that the market goes up or if you want to bet that the market goes down, it allows you to arbitrage. It allows you to basically take advantage of price differences in the same asset. And it allows you to compound on top of the assets accumulating and on top of the price going up and down. You can still add more money and compound it as well. So I'm about to give you an example of that. Right now we have $19.38 as our collateral. So we have we got basically have a $19 account. So what we're going to do is we're going to borrow the equity from the account. We're borrowing $11 USDC stable coin, right? Stable coins are dollar for dollar. The price will not go up and down. So we put in $19 and we took out $11. This is what is called an uptrend loan. When the market goes up, algo goes up, this $19 turns into $30. The $11 will still be 11, which increases the difference between the two, which gives you more equity. The liquidation margin is now under 10% because we pull. Whenever you pull money, the liquidation margin will go down. Whenever you add money, the liquidation margin will go up. Your borrow side is how you make money when the market is going down. And I'll explain that in a second. So this is what the uptrend loan looks like. You want to make sure that you have algo as your collateral and you want to have USDC on the borrow side to ensure that you have that set up. This is how you make money when the market is going up. Next, we're going to show you what the downtrend loan looks like. So that same $11, we're just going to turn around and add it to collateral. Working off the same $11, we're going to add that to collateral. So once it's added to collateral and you see our algo is still compounding, boom. So now we have $11 added to the collateral. Remember, we started with $19 and then we borrowed $11 from ourselves and added it to the collateral, which gives us a new balance of $30. So we just turned $19 into $30 worth of assets, worth of collateral, worth of compounding. Okay. So in order to set up your downtrend so that you can make money when the market is dropping, because you have this set up to make money when it's going up, you're going to go to the borrow side and you're going to borrow algo. So from the $11, now we're going to borrow $8. Okay. Boom, successful. And once you borrow, the liquidation margin goes back down. So anytime the liquidation margin goes over 10%, you can borrow more. Anytime the liquidation margin goes over 10%, you can borrow more. It doesn't matter if it's a penny or if it's $100, you can borrow. When the liquidation margin is under 10%, this is where you can make decisions to manage it. You can let it ride. If it gets to zero, you will lose all your money. Let me make sure I say that again and make sure it's clear. If the liquidation margin goes to zero, you will lose all your money and you will have to start over from scratch. That's why it's important that you understand how the account works, how the platform works, what the strategy is. If the liquidation margin goes to zero, you will lose all of your money. And the only reason the liquidation margin will go to zero is because you will mismanage the account by not knowing what you're doing. So definitely take your time. Don't be afraid, but make sure that you are paying attention to what you're doing and why. So as you can see, we have the downtrend loan set up. So we have $11 in USDC, which is not going to change. It's going to continue to compound. And then on the borrow side, we have added algo. We have 42 algo that we borrow, and it costs is priced at $8.16. When the market drops, the price of algo will drop. So this $8 will turn into $5, which means less, which means our equity is more. Our debt goes down. That means we have more control over our assets, the equity in between the assets. And we still have that $8 in here. And now the liquidation margin is over 10% as an example. And now, as an example, you will be able to borrow basically 20% of 1 penny. That's how much you would be able to pull right now based off of having just a $30 collateral. So we started with $19, we pulled 11, added that, then we pulled another 8. So let's add another 8 just to keep it simple. So once we add this other $8 that we pulled, the liquidation margin will go back up to 27%. The loan to value will go down. The net APY will improve. So let's collateralize that $8. Okay, bam. Liquidation margin went up. We now have $27 in algo instead of 19. Our collateral balance is $38 instead of 30. If the liquidation margin is over 10%, what does that mean? You can borrow. So we're going to borrow more stablecoin. So we're going to borrow another $4. So from the $8 that we just added, now we can borrow another 4 that will come straight into our wallet here. Right? And we started with $19. And now we have almost $40. Actually, let's add that $4 and push it over the 40. And bam. Liquidation margin went up again over 10%. And right here, we're going to borrow some more algo just to keep our debt balanced here. And voila. So we have turned $19 into $42, which it will grow and compound from here. We have a borrow balance of $27, right? We've only started with 19, but we've borrowed more than we started with. Also something to take note of. For anyone that wants to know how much money is in your account, you're going to do this. You're going to go collateral minus borrow equals the amount of cash that you can pull out. Collateral minus the borrow equals the amount of cash that you can pull out right now. So in this case, $42 minus $27. This is almost 43, but $42 minus $27 will give you what? That's 15. It's about $15 difference inside of there. Okay, and we started with $19. So there's about a $15 difference between $42 and $27, and that's how much cash you can take out of the account right now. $15. But what are you going to do with the $15 besides probably spend it or invest it in something else? But if you invest it here, your $15 is worth $42, and it'll continue to grow and compound for you while you sit it here, whether the market is going up or down. And as you can see, it's over 10% again. And now we can borrow 40% of a penny. Okay, so the more money you have in your collateral, the more you can borrow. Okay, and this is just to set up your private bank. This is just to make sure that you have the uptrend and the downtrend. To take it a step further, you will start to add other assets like wrapped Bitcoin and wrapped ETH. I want you guys to make sure that you have those included as well. If you need any help with that, just get with me or somebody in the class, in the Facebook group, in the Discord, in the Telegram, and we'll help you out. So if you have access to the classroom, then you also have access to the links for Telegram, Discord, XYZ. The intro to DeFi area goes over the technology a little more in depth, gives you another breakdown of some of the wallets, which I showed you. And you can see this hasn't been updated since the end of 2023. So I will be updating these because we have a lot of new people coming in. And then trading. For those who trade still, I just want to show you how you can incorporate trading from your private bank. Okay, you're going to basically incorporate this into your transaction. And I believe that'll be it for now. So I'm going to put this video in class 1. I'm actually going to post this video on YouTube, but it's going to mainly be for the class. So if you guys are in, here you go. I appreciate all the support. Any question, comments, or concerns, just reach out to me and we'll go from there. All right, I'm out.